G'day YouTube, Max right here, and I've got a really fun guest today, Dennis Porter. So Dennis, welcome. Thanks for being here.
Oh, I'm super pumped to be here, Max. Appreciate you bringing me on the show.
Okay, cool. So Dennis is big advocate of Bitcoin, obviously, big Twitter presence, and working a lot in the political scenes in the background and doing everything he can to support the Bitcoin movement. So really fun stuff to talk about today. And I guess probably the most relevant one that we'll start off with is Taproot. I think we're a day or two once from Taproot going live. And I just wanted to check in and give us some high level updates on what was the Taproot upgrade and why is it so significant?
Yeah, there was it's called Taproot, but as far as the upgrade is concerned, there were three actual Bitcoin improvement proposals inside the upgrade itself. Those three upgrades or improvements were called Schnorr, TapScript, and Mast. The later two, highly technical, not super important for the average person out there, but the very first one, which is Schnorr signatures, which were added, which have been around for actually decades, but weren't able to be introduced into Bitcoin due to some patent issues. The patent ran out in roughly around 2008. There needed to be some testing done in order to add it in. But basically what Schnorr does is it replaces the current signature algorithm, make it simple for everybody else out there. Currently on Bitcoin, when you want to have multiple signatures on a transaction, it requires a large amount of data, increasing the transaction cost significantly. So what Schnorr does is it allows you to condense all of those signatures into a single signature. Now, this does two things. One, obviously it increases the efficiency, reduces the cost of transaction fees, but it also provides a level of privacy. So for instance, if me and you owned a wallet together of coins, we could both sign it with a Schnorr signature and produce that transaction to the network, and nobody would know that you and I signed it together. So it's definitely an improvement for privacy and an improvement for efficiency, reduction in transaction costs. Another thing that it allows is it enables some of the more simplistic types of smart contracts and various types of other forms of DeFi to kind of trickle into Bitcoin. Now, it's not something where you're going to see all the smart contracts come over in day one or all the NFTs. It's, some people kind of blow it out of the water, try to say that it's this massive thing. It's a small improvement in that sense, but it does allow some of this stuff to become more cost effective on Bitcoin, which is really the biggest hurdle for most of those types of smart contracts and DeFi. When you want to do them on Bitcoin, the biggest hurdle is how much it costs. That's why everyone else does it on the other chains. So this does allow some of those sorts of transactions to occur on the Bitcoin protocol at a much more efficient rate.
Okay, cool. So that you're definitely helping me hone in here because I see things like smart contract functionality coming to Bitcoin. It's like, okay, now what the hell does that really mean? So on the spectrum
Well,
of zero to and I don't even know if there's a great scale, but zero to Turing complete, we're talking
yeah.
about going from here to here. Is that a fair assessment?
That's exactly accurate. I think the problem that we live in is just this desire to always have the most aggressive headline possible. And and
Clickbait
not only
world.
does it capture the mainstream media, but it captures the Bitcoin media as well. So oftentimes you see people putting out these reports saying, breaking news, smart contracts coming to Bitcoin. To be clear, smart contracts started on Bitcoin. The issue is that now, because smart contracts have become so expressive and they've become so complex, that the level of smart contracts that are occurring on, say, Ethereum or these other protocols just really isn't possible on Bitcoin, partly because of the way the code is set up, but also because it's just not like cost effective. You would never be able to run that type of smart contract on Bitcoin. But smart contracts were invented in the 90s by Nick Szabo. They're as simple as something like a multi-signature. That example that I provided to you earlier. You and I decide to co-sign something, or let's say you have a multi-sig set up for your wallet so that it takes two signatures in order for a transaction to be spent. That is actually considered to be a smart contract. Smart contracts are just dumb lines of code. They're nothing special, but some of the smart contracts out there are so detailed and expressive, and some of that just isn't allowed on Bitcoin. But more and more over time, as we go on, these things will come to Bitcoin. The problem is when you have a massive financial network that over $1 trillion is dependent on now, you have to be very careful when it comes to designing the code and the protocol itself, because there's literal people's entire wealth depending on the resiliency of this network. So that's why on Bitcoin, when people say, oh, it's so slow, nothing ever happens, that's intentional. We have to make sure that we're extremely careful with what I perceive to be a once in a lifetime opportunity, a one-time shot. If we mess up Bitcoin, we might not get another chance this time around.
Agreed. Yeah, it's very much like doing maintenance on a Jumbo 747 while it's in flight. So that's just going to be the nature of the system for its life. So I agree. Cautious steps by the king of all crypto is definitely encouraged. So help me understand a little bit. Can I go a little bit deeper on this? So yeah, okay. So in my understanding, people who are using multi-sig, this is not your mom and pop person. This is people who are controlling large funds generally. And people who are controlling large funds are generally not considered with the transaction fees on the Bitcoin network because it's trivial as a percentage. So I'm trying to figure out what are the actual use cases for who's actually going to use these upgrades in terms of that new smart contract functionality.
Yeah, so as far as multi-sigs are concerned, the most common use case today for this type of functionality is for you and me is one, for you and me as an average person on our own to be able to more secure to be able to secure our Bitcoin more appropriately. So let's say if you are, got $1 million, $2 million in Bitcoin, and you're worried about the single point of failure with having a single wallet or a single passphrase for your Bitcoin, you could set up a 2 of 2. Most people, I think, inevitably end up doing like a 3 of 3 or a 5 of 5, where you can do 3 out of 5 signatures will unlock the Bitcoin, or you need 2 out of 2 to unlock the Bitcoin. So that just helps provide a level of security for you, additional security. Sometimes what people will do often is to place one of those keys in your own possession, one in the possession of a custodian, and then you'll have another one that you like hide somewhere, right? Like you say, okay, I'm gonna bury one in the ground, right? Just in case it's like a backup. So you got a 3 for 3 signatures that you can use. And you only need 2 of them. So if the custodial goes down or decides to say, screw you, we're not gonna help you get your Bitcoin, you can dig that third key out of the ground, or maybe it's in a lockbox somewhere, or with a trusted
in a different continent or in some
whatever,
different
yes,
jurisdiction, wherever. So okay, so yeah, so so it's a more robust backup system is one way to look at it in terms
absolutely.
of that. So that's a pretty cool use case for that.
One more use case I'll say though real quick is so for large entities, corporations, where you do need multiple signatories in order to move money around. Very simple way of doing that to prevent any sort of fraud. Have multiple signatures, have a multi-sig. You can set them up as much as you want. You can do 5, 10, 15, 20. And now going back to the upgrade that we're talking about with Schnorr signatures, which allows you to be able to combine all the signatures into one and then go sign a transaction. So making that transaction much, much cheaper than it would have been before. So the ability for small, medium, large businesses to be able to have a transaction that unlocks funds, because oftentimes these corporations, these entities, they're moving funds around quite rapidly all the time, but they don't want to have to spend, $300-$400 every time they decide to spend money. So this enables those large entities to be able to sign the transaction with all the parties that need to be there and not have to have these large transaction fees moving forward.
Right. And that really, I think that's good steps towards that decentralized nature, because we don't want necessarily, I think it would be preferable for the network, the entire ecosystem, if we're not all putting our funds at the BitGos and these big, large third party, which, when you're a large company and even the medium companies, it's okay. It's a strategy. You can give a key to your CEO, your CTO, your CFO, but you can get closer towards an approximation where you got good redundancy, good backup, good security, all with these kinds of features. And it would be better if each individual company was holding it as opposed to holding it at a more centralized location. So okay, I can see where that's kind of going. It's kind of what I expected. But I was like smart contracts coming to Bitcoin. I'm like, hang on a minute. So good qualification there and good understanding. Privacy. This is sticking on the same concepts here. So privacy with regards to you mentioned the privacy with regards to the multi-sig. Is that the limit of the privacy improvements, or is there more?
As far as the privacy limits are concerned, it does pretty much just cover the idea of ensuring that you don't expose every party involved in the transaction. But there are other ways that improves your privacy. So for instance, with Schnorr, it makes every type of signature look the same. So if you want to open a Lightning channel, if you do want to open some sort of, more complex smart contract in the future, it's all covered under this belt. So it'll all look exactly the same. No one will be able to tell the difference between a normal transaction, a smart contract, a Lightning channel opening. It's all across the table, identical, which does improve your privacy. There is some small privacy improvements, like deeper into the way that TapScript works when combined with Mast. It does allow you to have the optionality of how your funds are unlocked. So usually when you are trying to do a Bitcoin transaction, you can choose between how you want the funds to be unlocked. You can give multiple options, like triggering moments, right? Like if you do X, you can unlock the Bitcoin, or if you do Y, you can unlock the Bitcoin. At the end of the transaction, when someone looks back with chain analysis, they can see that you had both of those options. But with this new upgrade, once you pick the option, the other option is invisible. So they don't know that there was multiple ways that this funds could have been spent. So it kind of hides some of the ways the contracts are built. So that does provide a little bit more privacy for the average user out there. But again, it's not like we're day one, when Taproot goes live, making all transactions 100% private. You can really still see the way funds are spent. It's just a mild improvement in the way you can see who is involved in the transaction and the options that were involved in the transaction as well.
Gotcha. Is there expected to be some improvement in the way third-party chains interact with the Bitcoin chain as a result of this? So I'm thinking in the world of DeFi, I'm thinking like cross-chain trades. If you want to sell your Bitcoin for, say, Tether, or Tether for Bitcoin or something like that. There's a whole bunch of programs out there, protocols out there. Like there's Thorchain, and there's a few others there. I'm wondering if this makes it easier for developers to build things on top of the Bitcoin network in a third-party way. Any thoughts on that?
From my understanding, this specific protocol change doesn't have any sort of influence over the connectivity between the different protocols. In fact, this is one of the biggest problems that we face in Bitcoin today. It's a conversation that I have regularly and have been trying to dig deeper. I'm going to be doing a series of episodes with the various different DeFi protocols that are trying to kind of get closer to Bitcoin, in the sense that they want to build on top of Bitcoin, or build near to Bitcoin, or adjacent to it. But this is a real big issue. You really can't connect anything to the Bitcoin network. It doesn't actually function that way. What people have been doing, though, in the near term, and unless somebody comes out with an engineering breakthrough that I'm not aware of at this point, right? Because SegWit that enabled Lightning was an engineering breakthrough that most people that were not aware of those didn't know it was possible. So there could be some sort of engineering breakthrough that occurs in the future. But as of today, the way that it's trying to be approached is either to create an asset, your own asset, something like Stacks, that goes adjacent to Bitcoin. They don't connect. They don't actually physically connect. You have to make a transaction, send something over, or you're doing something like Liquid, where it's a one-to-one peg, but it's also the same issue. You're having to send your Bitcoin to someone. They're giving you LBTC in exchange.
That's right.
The main issue with these side chains is really, how do you get the Bitcoin back into your possession when you decide to leave the chain in a trustless way? So that is really kind of the big issue here, because you're having to essentially trust that you can get your Bitcoin back in return. No one's been able to fully figure out this issue. Some people are working on some oracles, some multi-oracle solutions, but as of today, no one is able to truly connect to the Bitcoin network.
Gotcha. All right, let's change speed here a little bit. I was interested in an article today which broke, which is Marathon Digital. It's a NASDAQ listed Bitcoin mining company. And they just issued $500 million worth of debt, or they're about to actually. And it's going to be a 5-year note. And I believe the market bids on what the interest rate will be. So, but this is kind of following in the footsteps of Michael Saylor. He went and raised, and I think it was $1 billion in the end. And absolutely incredibly, to my mind, he was able to raise $1 billion. And this is something that, mom and pops and you and I can't do. This is something that's a privilege of these large companies that are on the stock market. And they were able to go to the debt markets and raise, Michael Saylor raised $1 billion with a 0.5% interest rate fixed on a 5-year term. I mean, that just blows my mind. I mean, how much Bitcoin would you get if you had access to billions of dollars with 0.5% interest rate fixed for 5 years? My goodness. And so it makes sense that more and more companies are going to do this. So Marathon Digital has announced that they're going to be doing that too. What interest rate they have to pay, time will tell, because as I said, the market bids on that. And so I think that goes live at the end of this year. And then they won't have to pay that back for 5 years, December 31st, 2026. So they will be in the position of, having whatever they pay, 1%, 2%, 3%, 5%. Just think about the opportunity there to be able to go and borrow money 5-year fixed for that amount of money and then just go and buy crypto, Bitcoin, something that's going up 100% a year, 150% a year. It's never been, no one's ever bought Bitcoin and held it for 4 years and lost money. That's just never happened ever. And, how does this change the game in terms of everything, in terms of how quickly the price will change? And then actually, let's answer that question first.
I think it's going to have a massive change on the way the price fluctuates going forward. One of the biggest differences that you can see between the different protocols out there, which has fascinated me from the very beginning of monitoring this change, is the way the miners have begun to start holding their Bitcoin. And not only are they holding their Bitcoin, they are going into debt to buy more Bitcoin, which, as you said, is something that kind of Michael Saylor essentially popularized. But it's a genius move. Those companies that can put Bitcoin on the balance sheet, keep it on the balance sheet, and go into the future and borrow more to be able to buy more Bitcoin and put that on the balance sheet as well, are going to be the ones that are the most competitive moving forward. The difference between Bitcoin miners and everybody else out there, even gold miners, is that they hold their Bitcoin. And even in the gold industry, they don't hold their gold. They sell it immediately onto the marketplace for cash so that they can continue their operations. But these companies that are looking this far into the future are going to have a massive competitive edge. This is something that was really an education process for me that I learned about from a friend of mine named Mike Alfred. He's a really smart guy, really understands these mining companies, has had a lot of experience with building them out. He really understands how the balance sheet needs to work for these organizations. And this is something that every company should be doing in the space. We all are going to be looking 5 to 10 years into the future. We all need to be getting as much Bitcoin on the balance sheet as possible. It's going to make us extremely competitive when it comes to buying more mining equipment in the future and allow for more of these companies to stay competitive against new entrants. And maybe there's a theory that at some point, some of these governments might start getting involved, and then the game will really be on when they start printing money to be able to mine hash rate.
Yeah. Yeah, if anyone new to the channel here, the very last video I made was should you use leverage when buying Bitcoin? And most people think that that's a relatively simple question, but the type of leverage is so critically important. If you're going to go on an exchange and do 100x leverage by its spot price, that's something. The price goes down 1%, you get liquidated, you're toast, it's all over. This kind of a concept where you have, so what they've done is they raise $500 million. They're going to use it for both buying Bitcoin and mining rigs. All right. So what they're going to do is they're going to buy mining rigs, which is their core business. They're going to use the cash flow that the mining rigs create. If they do ever need to sell any, or maybe they'll just perpetually raise debt, but if they do ever need to sell the crypto, they'll be very, very safe and they'll be able to pay off this loan, right? And then with whatever's left, they just go and buy Bitcoin. So there's no risk of being margin called. There's no risk of a liquidation moment for this type of strategy. So being very, very clever and using debt in a very, very smart way seems to be something that is accelerating. As you said, Michael Saylor popularized it, but you've got a whole world there of NASDAQs and Fortune 500 companies and companies all over the world that have access to these debt markets. And I think we could see a rapid acceleration from this. Now, what I wanted to tie this into is something that I think all Bitcoiners by this point, I hope, are aware of the concept of the 4-year cycle. Now, the 4-year cycle is dictated by the halvings, but what's critical about that is that the block reward that the miners receive for providing the value they do and securing the network, they would do the work, they would burn the electricity to earn the Bitcoin, and generally, until kind of nowish, they had to sell the Bitcoin in order to pay back the electricity they used. There was some margin of profit there, but a good portion, certainly a majority, generally they liquidated it straight back onto the Bitcoin market, and then actually had a price suppression effect. Now, the Bitcoin halving reduced that effect every 4 years, hence every 4 years, there's a little bit of a price surge. I say a little bit of a price surge, something in the order of 20 to 100x, and that is the origins of the 4-year cycle. With this, though, this new thing that seems to be taking place, these bigger Fortune 500 companies, conglomerates that are listed on the stock exchange, they have access to different financial tools. And what we're seeing is they are just not selling their Bitcoin. For example, this particular company, Marathon Digital, they haven't sold any Bitcoin that they have mined so far, I think this year, or at least from 6 months ago. Forget what the article said. And they're just raising money using these more advanced financial tools. So the question I have for you, Dennis, is this the end of the 4-year cycle? Are we going to see the 4-year cycle again? Are we going to have this big boom here in the next month, 2 months, 3 months, 4 months, and then this big crash? Or is it over? The 4-year cycle's toast because this mining cycle seems to be changing so dramatically.
Well, personally, I hope the 4-year cycle is not over. I love the big dips, being able to buy Bitcoin up for cheap. And I also think that these hype cycles tend to attract a lot of new entrants to this space. But inevitably, these will end. I think a lot of people in the Bitcoin space would agree that this is just a matter of time, whether it's this cycle or whether it's the next. I can't tell you for sure, but I do think that this will have an impact. Maybe we'll stop having 80% corrections and we'll only have 50% corrections. But I think that the corrections will still come. This is such a new asset. There is still trillions, hundreds of trillions of dollars that could get eaten up by Bitcoin over the next 10 to 20 years. I personally see Bitcoin going to a bare minimum of multi-millions within the next 5 to 10 years because of all of the new capital that's coming to the space. Bitcoin is the soundest money that human beings have ever had in history. There is no counterparty risk. There's no risk of government debasement. You can literally move $1 trillion across space and time instantly to anywhere on the planet for nearly free. It's an incredible innovation. And I think that the human species itself will literally go through Renaissance 2.0 because of this sound money. Last time that we had sound money, true sound money, for a long period of time was during the 1600s, the 15 to 1600s. Most historians accredit it for breaking us out of the dark ages, which we may very well be in some sort of a dark ages right now with everything that's going on, the world that we're living in. And when you have sound money, people are able to appropriately plan for the future. You have appropriate price signals, the market is in tune, and people are also able to focus on their passions and the things that they really want to do in life instead of trying to get inside the hamster wheel and spin as fast as they can to outpace inflation. You can sit still in a moment in time and actually think about what you want to do with your life in the future. And when you add this across all of the human beings on the planet, you start to find people who are developing and inventing and creating. That's why in the original Renaissance, which occurred right after the Dark Ages, right when we had a period of sound money for 200 years, you saw massive innovations in math, science, literature, and philosophy. All of the math, science, literature, and philosophy that we developed during that time is the basis for the entire planet, the entire society that we live in today. So it is my firm belief, and the belief of many others out there, that this will launch us into a new era. So I don't know if we're going to see these corrections again. Maybe they will come, maybe they will go. But ultimately, I think Bitcoin has a long ways to go before we get to any sort of a stable price. I think we'll continue to see ups and downs until I think maybe the dollar collapses and we all jump on Bitcoin simultaneously. That could be something that speeds this stuff up. But yeah, it's as far as leverage is concerned, I agree with you. I don't think that people should be going on these exchanges and even using 10x leverage. It's very dangerous. You can get liquidated in a matter of moments when the price of Bitcoin drops significantly in a very short period of time. So if you have an asset, I've been telling people, leverage your asset. Don't go in the market and try to do margin trading. I think it's a very dangerous situation you'll get yourself into. But if you have a home and you have a large amount of equity, for instance, I have a home with a large amount of equity, more than happy to pull the equity out of this business or out of this home because it's secured by the home itself. They can't come and say, oh, well, the price of Bitcoin dropped today, so we're going to be taking your home from you. So I totally agree with you. People need to be careful out there. There's different types of leverage. When you talk about leverage, don't go on these things in 100x leverage. I mean, you're just gambling. And why do you need to gamble when you already have an asset, as you said, that goes up 100%, sometimes 200% per year? There's no need to gamble with the most incredible innovation in human history.
Agreed. So now another thing that I know you work closely with is the whole political situation where Bitcoin meets the political world. And I noted an article today, and it talked about Coinbase was complaining that they have they answer to 56 regulators, and that's not 56 human beings. That's 56 like 3-letter agencies. Like there's probably thousands upon thousands of bureaucrats that Coinbase has to navigate through to offer a pretty simple service. And they were saying, there should just be one. And I think this is a very interesting debate because there's having just one regulator, the crypto regulator, that creates a very, very sharp tool for government to use against the crypto world. Whereas right now you might have 56 very blunt, incompetent tools. It's a headache to get through, but maybe their incompetence and ineffectiveness is somewhat of an advantage compared to the alternative. So I wanted to check in with you here, Dennis, and think what's your take on this debate?
You touched on it right there, Max. I think that having more of these entities ultimately slows them down and creates a level of confusion, which is great for Bitcoin. It's great for this entire industry because we're moving much faster than the regulators are, and we're able to push this technology into the future without having to worry if the government is going to come down on us. Now, in the near term, I think there is some sort of stress around whether the SEC or other government entities will kind of get involved and create some more regulation. But as Coinbase very well lined out, there are 56 organizations that are regulating them. There's tons of regulation in this space. We don't really need any more regulation. There's, I think, hundreds of pages of regulation. And moving forward, I think we just need to figure out how are we going to work alongside Bitcoin in the government. So, those on the right will probably say, we don't want any more government regulation. We're fans of small government. But for those on the left, it's about creating smart regulation that I think will encourage the Bitcoin ecosystem to stay here in the United States, not where we're trying to limit the capacity of the Bitcoin network and the Bitcoin infrastructure. We have hundreds of incredible Bitcoin businesses that are here in the United States, tons of infrastructure. For the first time ever, we are the #1 in Bitcoin mining in the entire planet. And that is an incredible achievement considering where we were just short 12 months ago, where China had nearly 60 to 70% of the hash rate. We are #1, and we want to stay #1 in the United States. I'm really hoping that the regulators don't get in the way of this incredible gift that was given to us by China. China seems to make these mistakes on a regular basis. Right when they have the opportunity to be a part of the future, they decide to stay in the past. And I want to make sure the United States is a part of the future and not following the same route as the CCP.
Completely agree with you. I think that will, I think right here in this conversation, we've talked about the greatest trade in the history of the world, I think will be Michael Saylor's $1 billion loan at 0.5% interest rate to buy Bitcoin. And probably the greatest blunder we were talking about this just off camera. I think you said the greatest blunder in 100 years could be China's attitude to kick all the miners out of China. It will go down in history as one of the most horrific things. It reminds me of, I mean, of course I wasn't there, but at some point, like the CEO of Blockbuster has had to be like, should we get involved in this streaming video service, or should we manage this? No, we've got a good product, let's just stick with it. And just instantly, I mean, in the space of a handful of years, all of a sudden, that person's the CEO of nothing. Like Blockbuster is no more. And I heard Donald Trump say something similar, like about 3-4 months ago, and he was like, "No, it's very important that the U.S. dollar stays the most important thing in the world, and I'm not really big on Bitcoin." And I'm just like, "Dude, you're sounding like the CEO of Blockbuster. And there's an opportunity here, and you're like, no, I really like the way it is. Yeah, but it's not going to stay that way, no matter how much you want it to be. So get in front of it, innovate with it, and remain a leader, or else the world will leave you behind." That's my thoughts. All right, let's
one quick comment there. I totally agree with you. But to me, it's like the CBDCs are the candy aisle in Blockbuster. Remember when they started trying to add like things to the aisle to create more revenue, like instead of just creating a streaming service? It's really incredible though how Bitcoin is able to come in and completely wash away all of the moat that the US government and the dollar has. But in the near term, just so people know, I don't think Bitcoiners or people in this space want the dollar to disappear or go away in the short term. I don't think anybody wants that world. That would be a very dark world if all of a sudden we wake up tomorrow and the dollar is hyperinflating at 50% month over month. I think we want to see a world where the US dollar is able to remain stable in the near term, and then Bitcoin is able to survive alongside it. I think you have heard, we talked about this in the pre-show as well, how Michael Saylor has presented this idea, and I've heard it from others as well, and I'm starting to align with it, which is the idea that in the near term, there will be one fiat and there will be one reserve asset, and that will be Bitcoin. And they will function alongside each other quite fluidly, considering the fact that you can put a stable coin onto the Bitcoin rails and you can use it alongside Bitcoin. This is already what's happening in El Salvador. Some have even conspiracy theories that this was intentional, that they did this in El Salvador and let it happen in El Salvador because they wanted to see how the dollar would function alongside Bitcoin. And there's a lot of really interesting developments coming out now with the Lightning Network and some of these what I would call stable channels, where you can open a channel with Bitcoin in US dollar denomination. And for some of those people out there who are worried about fluctuations in price in the short term because, they need to buy groceries, they need to pay for rent, you can open this channel and it would essentially allow you to say, I want to put $100 of Bitcoin in, but I want to make sure it stays at 100 because I got to pay for groceries this week. You put the Bitcoin in there and let's say a week goes by. If the price goes up or goes down, you can have the same amount of US dollars. The Bitcoin will go up or down. And this is kind of one of those things that really shows that the dollar can survive alongside Bitcoin. I personally believe that it could survive for the next 10, 20 years alongside the dollar. The US dollar could use Bitcoin as a way to essentially take over the rest of the globe. This would help stabilize the dollar's demand and allow for it to survive a little bit longer alongside Bitcoin. So I think I'm looking at a 20-year time horizon for the Bitcoin price to kind of continue going up, but the dollar to work alongside of it as a rail for the economy to kind of keep the tracks going, keep things moving forward. If not, obviously the other worst case scenario is we do see a hyperinflationary event, which some, as many as Jack Dorsey are calling for.
Yeah, well, I don't know about calling for, but dreading. But yes. So, and let's talk about that macro situation a little bit. So much debate about there. It's probably the topic that I spend the most amount of my time just debating and mulling over and rolling around the old noodle is inflation versus deflation. We've got the likes of Cathie Wood calling for deflation and many others that probably have more people calling for inflation. But with very few exceptions, the only one I can think of is Raoul Pal, who said, listen, everyone's calling for this. Wait, what if, the dollar's stable, or the US dollar index, I should say, is stable for the next 10, 20 years. But what's your take on this? Is hyperinflation inevitable, even if it might be 10, 20, 30 years out? And is there going to be a deflationary event before that event?
I personally believe, based on history of every fiat currency in human history, when you look back, you can see very clearly that all fiat fails. And when it fails to the upside. And by that, I mean it hyperinflates to the upside. So for 10,000 years, human beings have had money. And for 10,000 years, we have been corrupting that money, debasing that money, and manipulating it. So it's a really unique opportunity for the first time ever to have Bitcoin as a tool to protect our wealth and protect our value. But throughout 10,000 years, history is clear. Every single type of money or fiat that we have created, right, outside of gold and silver, things that you can't manipulate, end up becoming debased, end up becoming manipulated, and end up hyperinflating basically to being worthless. So it might not happen in the next 3 years or 5 years, although it could, which is terrifying to even think about. But most likely in the next 10 to 20, 30 years, you'll see, I believe, a strong increase in hyperinflation across the board with all fiat currencies, with the dollar being most likely the last one to go. As I said, that could take 5 years, 10 years, 20 years, 30 years. Who knows? It could happen beyond our lifetime, but it's inevitable. Every fiat currency goes to zero.
Yeah, I think I concur with those thoughts. Absolutely, exactly. All right. Is there anything else you want to touch base on before we wind it up?
Yeah, there's a lot of stuff going on here in the United States politically with Bitcoin. If you're interested in learning more about it, hit me up in my DMs at Dennis Porter, Dennis _Porter_, or you can just look up Dennis Porter on Twitter. I'm the number one Dennis Porter. So I got the SEO locked down. But I have a lot of things that I'm involved with. I have candidates that are running all over the country that are pro Bitcoin. And I think it's really important that we get involved politically as people that are trying to defend Bitcoin here or crypto in the United States, because there's a very short window of time when I think regulators and legislators don't understand this technology and could make pretty big mistakes that could lead us down the same path as the CCP. And I really want to make sure the United States is the number one place to buy, sell, trade, mine, and earn Bitcoin, because I want to be a part of the future. And I'm hoping that I can get enough people on board. We have tons of organizations, tons of PACs and super PACs that have formed over the last 6 months that are working together to help fight back against what's going on in Congress. So I appreciate everything that all those people are doing, and I look forward to the incredible work that's going to be happening. But Max, yeah, man, thank you. Appreciate you having me on the show. Had a really great time, and I look forward to coming back on in the future.
Thanks, Dennis. Appreciate you too. What about your show? You want to give a shout out to the show as well? Let's
Yeah,
do
I
it.
have a show called Smart People Shit on YouTube. I bring on some of the smartest people in the Bitcoin space. So I've had on Max Kaiser, Robert Breedlove, Preston Pish, you name it. I also do occasionally have debates that I do. Most of them take place on Twitter Spaces, and then I upload them to my thing over there on YouTube. So I've got one with David Hoffman from Bankless, one with Udi, and I've got a couple other that are lined up coming out soon. I just had a really big Bitcoin DeFi versus crypto DeFi debate that I did. And that was a really incredible one. We had Lynn Alden in there, Eric Wall, and I think Udi was there as well, Lamar, D++, tons of different people with just much bigger galaxy brains than myself. So that's the point of the show is I bring on people with these galaxy brains, and I try to be the in-between person that brings it down so that the average person can understand what's going on in the space.
Awesome. So guys, do me a favor, smash up that like button if you'd like to hear more from Dennis. We'll get him back on the show again in the future. And also, you can really, really help me out. What was the favorite thing that you learned in this particular video? Let me know in the comments, and that helps me understand what kind of guests you would like me to have on in the future, what topics you're most interested in, and I can tailor the content specifically for you. So go ahead, do that right now. Leave those comments, smash up that like, hit the subscribe button, of course. And Dennis, thank you very much. And guys, I'll see you tomorrow.